So with the big beautiful bill being passed just on the 4th of July, I'm getting a ton of questions about qualified small business stock. To level set, QSBS is to help small businesses compete with big businesses. It's to help smaller companies raise capital and give angel investors or venture capitalists an incentive to invest in these small companies. A company qualifies for QSBS simply by being a C corporation, a domestic, a US corporation. If they issue shares to founders or to early stage employees, and the gross assets of that company are less than 75 million now, and prior to July 4th, 50 million, if the gross assets of that company are less than those gross amounts on the balance sheet, when the stock is issued, when you go to sell that stock in the future, you get an exclusion under QSBS. And that exclusion can be up to now $15 million if it was started after July 4th. When you sell the corporation stock, you will pay no capital gains tax, up to $10 million per taxpayer. The new bill, if you hold the stock for more than 3 years but less than 5, you can get a 50% exclusion. And if you hold the stock for 4 years but less than 5, you can get a 75% exclusion. Stacking QSBS benefits is something that most of my clients are doing. They have a small company, it qualifies for QSBS, they sit down with us and we talk about each taxpayer gets a qualified small business stock exclusion. So you'll get 10 million or now 15 million, but if you gave some stock to your kids or some stock to your parents, they could also get 15 million or 10 million previously of exemption. And so it begins the conversation of, where do you want your wealth to go when you die? Should we start doing some estate planning and helping some of your family members and take advantage of the 10 million or $15 million exclusion per taxpayer? We start planning QSBS as early as the company starts. We understand when the company's worth nothing or very little, we can make lots of gifts and it doesn't eat through our gift tax exemption. So the best time to start is early on. You can take advantage of maybe being an LLC before you become a C corporation. If you're an LLC, maybe it's time to think about converting to QSBS. And maybe you'll convert to QSBS and you'll get way more than the $10 or $15 million exclusion. I'm an entrepreneur at heart. I love working with entrepreneurs. If you don't feel like your CPA is your partner with respect to your taxes, we should talk, because I'm that person.